Hi everyone. Today let's talk about Disney earnings. Then we'll talk about the big news for tomorrow, which is the CPI report at 8:30 in the morning. Then we'll take a look at the charts and of course my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Disney earnings were a mixed bag, to say the least. They're currently going through some restructuring woes and streaming issues. They missed on subscribers, which is their big metric right now. They have 146 million subscribers, which is actually a decrease from the previous quarter. So people unsubscribing from Disney, definitely not what you want to see if you're an investor with the company. They've been going through some things. They picked some fights with the Florida government, and that has caused them to lose some money, as well as lose some customers, I think, in my opinion. In terms of earnings, they did beat on earnings. They did miss on revenues. Talked about subscribers. They missed on that one. And we'll see how the markets respond to forward guidance. It does seem like they're going to be increasing their prices from what I've seen on their subscription service. So that might actually raise some revenues and start to even out the cost for their subscription service. Currently, they're losing money on it. But if you're going to do that, you have to continue to put out good content that people actually want to see, and that seems to be something that they are currently struggling with. Moving over to the economic calendar, 10-year note higher than the previous read. 10-year interest continues to go higher. Looking at tomorrow, this is the big one, core and headline CPIs. Core expected to step down 0.1%. Headline expected to step up 0.3%. And for some reason, this one just feels a little bit different. I think energy has gone a little bit higher than expected, and I think that might affect CPI going higher a little bit more than expectations. We'll see how this one plays out. Definitely going to be interesting at 8:30. Otherwise, in the afternoon, you got Fed balance sheet. They continue to offload about $30 to $40 billion worth every single week, and so far that hasn't affected the markets too much. Moving over to earnings, Disney beating on earnings, missing on the top line. Honda missing on the top line. Trade Desk beating on both. You like to see it. And then Roblox missing on both. This is still a growth company. It's not crazy unexpected, but definitely interesting. And then looking at tomorrow, you got BABA in the morning. That's pretty much it for the day. Moving over to Max Payne, you can see 447 continues to be a put wall. I would expect to rally at least a little bit before the end of the week. Of course, that's going to be heavily dependent on CPI. If it comes back too much higher than expectations, like I think that it might, this could absolutely crater, get down to the bottom of the calls, start looking at a 442, 443 finish for the week, or about another 1% down. Absolutely possible, and that's something you have to factor in. Put call ratio 1.6, a little bit lower than we've seen recently, and 1.1 million options, not a ton in the markets yet. Moving over to the charts, starting off with the S&Ps here on the hour and the 4 hour. We held this level after testing it once again. We tested it yesterday, tested it again today, tested it right at the end of day today as well. And at this point, 445.49 is a solid level. You could absolutely trade off that level. But like I said, I think CPI might give us a big wick down, maybe push down to that 443 area and longer term trend support. You also have the 200 SMA here on the 4 hour chart sitting down at 441.53. So right now we're kind of neutralized. We did not make a new low, but we're not rallying yet either. Moving over to the NASDAQ, not the same thesis here. We did make a new low. We did test this level here at 367.63, rallied up to 21 EMA and then rejected from that level all the way down to those lows. Once again, at the end of day, we're testing that 200 SMA like we talked about yesterday on the 4 hour chart. We're right at that level here after hours. If it's going to hold, it really needs to hold right now, but you can see this structure. We're still in it, and it could absolutely push lower on CPI tomorrow. Moving over to the Russell and the Dow on the 4 hour, you can see the Russell had a pretty wide range, got up to the 21 EMA, rejected from there, got much lower, retesting yesterday's low almost. Didn't quite hit that 144 EMA either, and now we're right at horizontal resistance, 191.89. And then we have a little bit of trend support here as well. We've been chopping through that zone. Still looks pretty weak. Dow, on the other hand, continues to chop right between those two levels. Wick the high, wick the low, and we're back into the zone. Not giving us clear direction at all. Moving over to the ratios on the weekly chart, I just want to highlight that the NASDAQ is pulling back against the SPY and the Russell. So both of these pulling back. You have technology moving lower, both of them in bearish momentum, both RSIs pulling back here. Moving over to Apple and Tesla, you can see Apple is still holding right at that 178.58 level. Dipped below it once again, testing these lows, but we're chopping at that level. Still a downtrend, but it's holding a little bit better like we talked about yesterday. Tesla making new lows here again, taking out this wick. And we're so close to that 223 price target at this point, and I do expect to get there at some point. Definitely a bearish trend, and everything is still intact to the downside here on Tesla. Moving over to Microsoft and NVDA, you can see Microsoft has been downtrending pretty consistently, taking out this level, pushing down to 315 in my opinion. We're below all the EMAs and SMAs on the 4-hour chart. We're almost in line here. You have the 144 above the 200, but everything else is in line, definitely showing weakness. NVIDIA also showing significant weakness here. Big red bar today. Joe Biden announced some more restrictions on technology going to China, and that's definitely going to affect the chip market, including NVIDIA. Either way, looking at this structure, looks bearish, big down move, below all the EMAs and SMAs for the first time in a very long time here on the 4-hour chart. You can see we've been above it for basically since January of this year. And now you can see we have broken down 420.50, definitely an interesting level right at this previous consolidation here. And then you have the lows from this other consolidation at 405.30. Certainly could hold in this zone, but absolutely looks weak on the structure. Moving over to staples and discretionary. Staples throwing some wicks to the upside, still holding in the zone, still holding the 144 EMA. Discretionary, big leg down, got below all the short-term EMAs and SMAs, as well as the 144 EMA. At this point, you have to expect we're going to this previous low down around 168.64. And then you have the 200 SMA sitting at 166.07. This looks weaker than it has before. We did have a big dip kind of like this in July, but this is also below the trends that I've been watching, so it does look a little bit weaker now, and you can kind of see how this arc is developing. Looks like we're getting set up for a breakdown. Fairly critical point here for discretionaries. Moving over to utilities and oil and gas, you can see utilities has been on a down leg, but it's finding support at my level, 64.20. We're above it now, throwing some wicks to the 21. You can see we tested this level here in May, tested it once again in June. We're back in this zone. We did overthrow it by quite a lot, but then we pushed back up. We're holding above, fairly interesting level, bullish momentum, RSI moving higher, something to watch. Oil and gas, on the other hand, threw a big wick right through my price target. We talked about 150 yesterday. At this point, this looks really strong. Nothing saying that this is going to slow down quite yet. You can see RSI pulling back a little bit of divergence there. But this new high on RSI was higher than the beginning of August, so you could argue that this is kind of counter to that now. Overall, structure still looks very good. Moving over to breadth here on the 50 and the 200. 50-day average moving lower once again. 200 still holding in this zone. Again, if CPI comes in rough, I think this is going to push us down fairly significantly. We're still below 62. But this is a tight window here between 62 and 58.90. Very interesting at the 55 EMA. If this holds, and we start to push up, set up a lower high, retest the 21, something like that, that could be a fairly substantial run in the short term. You do have to entertain that as a possibility. 50-day, on the other hand, still looking like a falling knife. Have a new low close there here today. Moving over to the dollar, you can see we came down, got very close to that 21 EMA on the 4-hour chart. We're rallying back up here now, still at this critical zone, right at that 144 EMA. Going into the CPI report, CPI is going to determine whether this breaks out or breaks down here tomorrow, in my opinion. Clearly at an important level. If it breaks out, that could be a strong push and push equities down quite a bit. If it starts to break down, maybe we see a bounce in equities. Moving over to JNK and TLT. An absolute doji, nothing doing on JNK. Very interesting level. You can see if we zoom in a little bit, that's the highly traded zone. We're right on top of it. Clearly is going to break one way or the other. Momentum says we're slightly bullish, fairly interesting. TLT also at a critical level at the 9 EMA on the daily chart. If it's going to break higher, it needs to do it now. Momentum also arguing that it could be pushing a little bit higher, similar to what we saw here. Got up to that level, broke higher, hit the 21. That would be a pretty substantial move for TLT, and it does seem possible on CPI tomorrow. Moving over to the volatility indices, MOVE index pulling back, VIX still holding in the zone right up to CPI like we expected. CPI comes in higher, I think we'll see a nice spike here. Comes in lower, we might come back down and test these shorter term trends. Definitely critical going into tomorrow. Moving over to my accounts, I played pretty good defense. You can see I was down still a few $100s, but the NASDAQ was down more than 1%, and I had 200 shares and I was down less than 0.2% on that money, so still doing fairly well playing defense. You would have liked to see a little bit of positiveness, especially with the pretty decent moves that we had today, but overall not terrible. And you can see here I am absolutely flat going into CPI. I think there's going to be some moves on CPI and it's going to come back a little bit unusual, might increase the volatility a little bit. It's also okay to be flat going into the next day. You don't always have to have positions on. Right now I'm just a little hesitant and I want to see what CPI does tomorrow, and I can always establish something early in the morning session. Let me know down in the comment section what you think of Disney earnings or any of the other things that we talked about here today. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.